This got sent to me. This is Zero Hedge on Twitter. Well, obviously, like if you're not familiar with Zero Hedge, just he posts a lot, and then he has a blog, and then he posts under Tyler Durden. If you're not familiar with that, that's from Fight Club. And I think Fight Club has a lot of important parallels to crypto. If you guys haven't watched Fight Club, I highly recommend it. I think there's a lot that you could garner from it, especially in today's age, right? To a certain extent, things like the destruction of masculinity, etc. It's an important one to take a look at. But wealthy Chinese activate financial escape plans, terrified of Xi's coming reign of terror, and why this is good news for Bitcoin. This is, unpacking this is rough. So we're going to try to unpack it. I read this, and I'm still, let's be clear. This is opinion, right? This isn't necessarily, we got to be careful with this one. Okay. So grain of salt, take it with it. Let's get into it. Back in September of 2015, more than 7 years ago, when Bitcoin was trading around $225, and just after China had stunned markets with its relatively modest yuan devaluation, we made a modest prediction. In summary, while China is doing everything in its power to not give the impression that it is panicking, the truth is that it is one viral capital outflow report away from an outright scramble to enforce the most draconian capital controls in its history, which, as every Cypriot and Greek knows by now, is a self-defeating exercise and assures an ever-accelerating decline in the currency, which authorities are trying to both keep stable while also devaluing at a pace of their choosing. Said pace never quite works out. Now, I think in general, this is not just happening in China. I think this is global. I think globally, multiple currencies, including the US dollar, are doing the exact same thing. Personally, but that's personal opinion. So what happens then? Well, China's propensity for gold is well known. We would not be surprised to see a surge of gold imports into China, only instead of going to the traditional commodity financing deals we have written extensively about before, where gold is merely a commodity used to fund domestic carry trades, it ends up in domestic households. However, while gold has historically been the best store of value in history and has outlasted every currency known to man, it is problematic when it comes to transferring funds in and out of a nation. It tends to show up quite distinctly on X-rays, which is why we would not be surprised to see another push higher in the value of Bitcoin. It was earlier this summer when the digital currency, which can bypass capital controls and national borders with the click of a button, surged on Grexit, concerns and fears of drachma return would crush the savings of an entire nation. Since then, Bitcoin has dropped. However, if a few 100 million Chinese decide that the time has come to use Bitcoin as the capital controls bypassing currency of choice, and decide to invest even a tiny fraction of the 22 trillion in Chinese deposits then in Bitcoin, whose total market cap at last check was just over 3 billion, sit back and watch as we witness the second coming of Bitcoin bubble, one which could make the previous all-time highs in the digital currency seem like a low point as Bitcoin soars past $500, past $1,000, and rises as high as $10,000 or more. Well, we got that direction spot on, but not even we could anticipate just how much or more Bitcoin would soar to some 6 years later when it nearly topped $70,000. Of course, far be it for us to claim that Chinese capital outflows were the only driver behind the exponential rise in Bitcoin, but they certainly were one of the earliest catalysts. behind what would be a truly fantastic generational wealth creating melt up, and certainly explains Beijing's relentless crusade to crush Bitcoin and crypto in general, and to launch its own laughable attempt at a CBDC, which not unexpectedly has become a complete disaster. Why do we bring this up? For 3 reasons. First, as we noted yesterday, China is aggressively engaged in stealth devaluation. And while it pretends to be trying to contain the yuan from collapsing, the plunge in the currency has been historic. Even CFR analyst Brad Setzer admitted today that until China proves otherwise, it is effectively engaged in a controlled depreciation. But so far, nobody in the US pretends to notice. Second, back in 2015, total Chinese bank deposits were $22 trillion. Fast forward to today when they are 2.5 times larger at $55 trillion, or more than double their US equivalent. That's a lot of domestic deposits that will need to be quietly ferried offshore once China admits it is aggressively pursuing yuan devaluation, which it is doing right now. Third, back in September 2015, millions of Chinese rushed to park their savings offshore, terrified that Beijing's ongoing devaluation wave would wipe out the value of their financial assets. Well, it's time for another offshore funding scramble because, as the FT writes, today, thousands of wealthy people across China are headed for their exits as President Xi Jinping secures a 3rd term, making him and the ruling Chinese Communist Party even stronger than before. Recall that just hours after Xi not only was declared dictator for life, but unceremoniously and in full view of the entire world, had his centrist, globalist, and pro-reform predecessor, Hu Jintao, escorted out of the building, guaranteeing that the rest of his rule will be a radical departure from heretofore accepted norms, and calling for the great rejuvenation of the Chinese nation. It's a large shift in a new direction. If you guys watch Tim Pool, you might get a kick out of that one. Oh man. Yeah. So based on revitalizing the CCP's role as the economic, social, and cultural leader, Chinese stocks cratered to multi-decade lows, and the yuan plunged to a record low as the growing realization of the horror that is coming swept across the land. As a result, Chinese wealthiest were met with market turmoil on Monday when Chinese stocks crashed the most since 2008. And that's a big deal, guys. We've been talking about this. They're going through a housing financial crisis, primarily because there's not enough people and there's too much housing, which, is a completely crazy problem that is opposed to what we are being told by a majority of people, which is that we need to reduce the population. We're seeing, in both Japan and China, who have, basically been pretty hardcore on population control in different forms, obviously, one more crazy than the other. They are now suffering from the reduction of that population, which is very interesting. And that is impacting the housing markets in both areas. And I think it's going to get bad in the U.S. as well, because whether you like to admit it or not, the U.S. is participating in population control too. It is this shift in society where you are encouraged to not have kids, have a 2-household income, meaning basically you have, even if you are married or have a significant other, you'll never see each other because you'll always be working, right? Well, it's a slave state, a modern slave state, in my humble opinion, right? And you are highly discouraged to have kids because you can barely support the household as this gets worse with 2 incomes and just 2 people. You add a 3rd person that you can't afford it. Then in addition to that, we are pushing for abortion all the way through birth by past a month. Now, whatever your opinion on abortion, right? It doesn't really matter because it's not about the right to have an abortion. It is the narrative surrounding abortion, which abortion is now considered good. In my humble opinion, abortion shouldn't be considered good, but the rights of another human being is none of my say, right? You have the right to do whatever you want. I just don't think the promotion of it is necessarily a good thing. And I think that is what we'll end up seeing is as we get, obviously, less population, I think we'll run into more issues with housing and so on, especially as we boom up and then collapse down like we're seeing in Japan, okay? Welcome to the new son of a tech. In any case, as hundreds of millions of Chinese savers now scramble to move as much of their assets as far away offshore from the lunatic fringe in Beijing as possible, we have been flooded with the reports that wealthy families across Hong Kong and China are at a tipping point about triggering so-called financial fire escape plans to avoid the wrath of Z and the CCP, according to David L'Esperance, a Europe-based lawyer who works with elite Chinese businessmen who spoke with Financial Times. Quote, now that the chairman is firmly in place, I have already received 3 proceed instructions from various ultra-high net worth Chinese business families to execute their fire escape plans, he said. Ahead of the run-up to the 20th Party Congress, there was much concern that if Z cemented his third term, there would be no pivot to his controversial policies, including the COVID-0 strategy and increased regulatory measures on companies, which have devastated parts of the economy. The actual outcome, in which Z crowned himself undisputed ruler and surrounded himself with fawning sycophants, while threatening a full-blown putsch of upper class, was far worse. Ki Meng Lo, a senior partner at Denton's Rhodic Bank in Singapore, which in the past 2 decades has emerged as the world's Swiss bank account, or the only place in the world where accounts remain truly anonymous, said that some Chinese elites have been inquiring about setting up family offices, even before last weekend, as a way to protect wealth from the CCP. The clients I work with saw Z's third term as a foregone conclusion much earlier than this week, Lowe said, adding many of these families who generally shield wealth in Hong Kong found it less attractive since Beijing now has authority over the territory. And this was another problem, and it's a big problem I have with Activision Blizzard, for example. When they basically banned, because of money, banned essentially somebody from saying free Hong Kong. And it seems like such a minuscule thing at the time, right? But look at the ramifications. Look what happens when you ignore basically the outcry of the people. This is the problem that I've had across everything when we talk about Russia, Ukraine, whatever it may be. We need to listen to the people. They're not that much dissimilar from you and I. Sure, some of them, like they different dialects, etc., but they, for the most part, probably have the same base goals, which is a decent life, taking care of their family, right? That's more than likely what it is. So, we got to start paying attention a little bit better to these outcries. And we can't punish individuals for the actions of their government. And that's really what it comes down to. And I think as an individual, we can do that. We have to stop punishing individuals for the actions of their government. We need to enable individuals to fight back against their government, especially when it's in a state of tyranny like it was in China. And we didn't do that. A US-based company, Blizzard Activision, straight up banned somebody that was crying out for help, and now this is where we end up. And sure, it was a lot of money for Blizzard back then, but Blizzard will lose a ton of money in the Chinese market as it collapses because of their own actions. It's crazy how that karma for that one little action will turn around and just completely decimate the economy. It's wild, guys. Sure enough, new data from Citi Private Bank shows the number of family offices in Singapore soared 5x between 2017 and 2019, and nearly doubled from 400 at the end of 2020 to more than 700 a year later as wealthy Chinese rushed to park their wealth offshore. Ryan Lin, director of Bayfront Law, also located in Singapore, said he was contracted by 5 wealthy Chinese families last week to establish a Singapore family office, and of those, 3 are quickly moving forward. Lin has helped establish 30 ultra-wealthy family offices in Singapore in the past year, as many of these families hope not just to relocate their money, but also their family. He also admitted that many of his clients had spent years preparing to exit China, legally moving money to safe offshore places that CCP cannot touch. Some of these families are even applying for citizenship abroad. Xi is expected to unleash a broad range of wealth taxes under the populist campaign Common Prosperity that has spooked the wealthy. But hiding wealth could be the least of the worries, considering there have been numerous accounts of some billionaires forced into hiding, such as Alibaba's Jack Ma. Ongoing chaotic lockdowns under the COVID-0 policy, and Common Prosperity as Xi secured a third-term push high net worth residents to the exits. The obvious question then is how long until China battens down the hatches and makes money transfers to Singapore impossible. The family motto has always been, keep a fast junk in the harbor with gold bars and a second set of papers. The modern equivalent would be a private jet, a couple of passports, and foreign bank accounts, Lesperance said. That is the world we are in. It is tough stuff. Of course, to fund said foreign bank accounts, one needs either gold bars to flee China's infamous financial firewall or their modern equivalent, Bitcoin. And while gold shows up on X-ray, crypto does not, whether it is sent by transfers across the blockchain or through unobservable flash drives. Indeed, one has to wonder if capital outflows from China are already starting to push Bitcoin higher, as fears of another round of draconian capital controls by Beijing spark outbound money flight. And if capital flight from China back in 2015 that helped propel Bitcoin nearly 100x from $250 to $20,000 during the first Asian-driven Bitcoin bubble of 2017-2018, one also has to wonder how high another full-blown Chinese capital flight will push the digital gold this time. And here's what's wild. It would be outside the halving cycle, potentially. However, we're kind of in a weird position. I still think 2023 is going to be extremely bad. Not financial advice. I just think it's going to be really rough and go sideways for a lot longer than people expect it to. But the good news is as long as inflation is going up and other things are happening, well, and as soon as we hit deflationary, which is what we want to see, right? We're starting to see deflationary in China. Once we start seeing it in the US dollar, things get really interesting. And I would highly recommend you watch my video with, I forgot his name now, a Bitcoin miner. Let me get the video up here for you guys that talked about this. This would be the very first time that we would see essentially Bitcoin go react to deflationary. And I highly recommend listening to my show with Orion and Taurus and Alex Hayes. Very intelligent guy, knows a lot more than me on this subject and was able to educate me a little bit. Okay, so I think that's good. Here's the deal. I think that in general, we have potential here for a breakout from Bitcoin outside of the traditional halving cycle, if things really are this bad. However, if I was in the position of an elite and I wanted to basically have more privacy, I would probably pick a different solution, maybe something like Monero, right? And that's just how I see it. Like if it was me, Bitcoin's got that public ledger. I don't want to be tracked down and then, punished outside of, or however that may go. That's what I would be worried about. But they do make, Zero Hedge here makes some good points. And things get really interesting when we take into consideration that today we had the largest outflow of Bitcoin from Binance ever. Actually, the largest outflow of Bitcoin from exchanges ever in the past 24 hours. As you can see here over on CoinGlass and our balances, here's the Bitcoin balance on exchanges. And Binance keeping in mind, of course, their recent partnership for BNB and Kazakhstan, just saw today a 58,092 Bitcoin outflow from its exchange. Which is simply insane. It's actually in a complete opposite move of what we were expecting going into November. This is good news because what we have been going through lately is the rubber band. For those that are not familiar with the rubber band in trading terms, it means that essentially we've been going sideways so long since June, right? Stretching the rubber band further and further. And at one point it will pop and either go up or down drastically. The next huge, of course, increase or decrease of cryptocurrency based on charts in trading analysis, not my trading analysis, the trading analysis I get from other people, and definitely not advice here, is that essentially in November and December, we would see that rubber band pop and we would either skyrocket up or completely dive down. Now, initially what we had saw was an inflow of Bitcoin into exchanges. And there was some expectations of this actually going down. But now with this huge outflow, the single largest 24-hour outflow of Bitcoin from Binance ever, this does mean essentially that we could see a skyrocket up. And a skyrocket up in the year 2022, mid-bear cycle, basically, because we're expecting like a bear cycle to go till the end of 2024, would be completely unexpected. But due to the greater macroeconomic effects, I suppose it could be possible. I'd like to hear your thoughts and opinions in the comment section. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.